into today's trading idea, the first one that we have will be MBSB. So MBSB is technical buy that we highlighted much earlier on 30 January. The gain, so this kind of stock move a little bit on the slower side, but it actually goes above our first target after hitting the high of 81.5 cents. So the stock is actually gained about 10% before station the consolidation moves there. So the consolidation was pretty much kept right within the 80-day moving average, give you indication that the trend is still pretty strong on the upward. So building on the back of the what we call that previous downtrend line, now you've seen a similar rejection within those lines. Those line previously was resistant, now turning into support level, and the subsequent recovery saw the stock finally stage a solid breakout move yesterday on the back of high trading volume. So this is pretty much indicate this the upcycle or the ongoing uptrend set to continue. So building on the fresh breakout move in RSI, we expect the higher momentum could continue to drive the stock higher. Hence, we actually reiterate our technical buy with a new and higher target at 86.5 cents and 94.5 cents, while the cut loss has been revised higher to 76.5 cents, giving you quite a decent risk to reward ratio of 1 to 2.6, which means you are risking about 6% downside risk with a potential reward of 15.9%. There's no quant scoring for the stock for MBSB. Now, moving on into a second trading idea, we have Raytech. Raytech, it was pretty weak over the past few months. But the downside was pretty much kept within 4.45 region. So if you recall, the pullback has seen the stock continue to test this particular level a numbers of time, and apparently there's a plenty of support within this particular zone, which sit at 61.8 Fibonacci level. So despite numerous attempts has been met over the past few months, it pretty much holding quite well. So we believe there's could be plenty of interest coming in to absorb this particular level. Now, what made interesting is yesterday gap up move on the back of high trading volume, and the stock also taken out the consolidation within the triangle pattern. So the pattern neckline has been taken out, and the stock also surged past the 80-day moving average, and you see a similar breakout in RSI, so suggesting the breakout move is quite genuine, and we expecting the new upcycle to begin. So we put our next technical target at 50 and 5 ringgit and 5 cent, and 5 ringgit and 50 cent, while the cut loss will be at 4 ringgit 40 cent. So risk to reward ratio 6.78% downside risk with 16.5% upside potential. The quant scoring for this one, we are using quant style of growth with the scoring high at 8.7. Last but not least will be High Tech Padu, the popular stock of the day. One of the reasons why I decide to highlight the stock, because this so-called consolidation. So the rapid rally that we seen earlier was followed by a classic kind of what we call that a consolidation in the shape of triangle. So often this rapid rally can be what we call that interpreted by the wave 3 movement. So the normal what we call that consolidation within triangle can be interpreted also as a wave 4 consolidation, and we think the consolidation about to end, particularly as the stock building up toward the pattern neckline. So trading volume was light as the stock contract within the triangle pattern, but recently has started to improve. We've seen a slight spike in terms of trading volume as per yesterday, and a minor breakout in RSI. So we think this could be what we call it one of the signal that could be a breakout soon. So we expect a breakout. You see a volume profile on your left here, suggesting there's a plenty of interest coming in, supporting the price within this particular zone. So risk to reward ratio is still quite attractive. So we are risking about 8.3% with a cut loss at 2 ringgit 20 cent, and we put technical resistance at 2 ringgit 65 and 2 ringgit 99 cent with the upside potential about 24.38%. So that means risk to reward ratio is close to 1 to 2.9.